Guys, welcome. Uh, let's start today's analysis. Today is 4th December. What we generally do, we do the analysis, brief analysis for previous day before starting. So, what was it like previous day, yesterday? On 3rd December, market opened here, fell down, and then reversed and closed somewhere here. So in this case, the pattern was kind of reversal pattern. Now two important levels are, this is high and this is low, PDH and PDL, previous day high, previous day low. And I told you this one again, it is coming in the CPR range, this turning point. So there is no need to mark this turning point. So because CPR will take care of this level. Now high, low is important, and one more important thing is there for yesterday. This is CPR. Now need to understand that if the CPR is not touched by any of the candle on that day, on a given day, that CPR remains as virgin CPR, and virgin CPR usually is very powerful. So we have to extend this level. How will extend? We'll just mark this here and we'll extend for today. Okay, this level we are marking, and this is called virgin CPR. So just to ensure, we'll mark it. Okay, so if the market comes to this level, there is a high probability that it will reverse from this unless it is broken, the virgin CPR is broken. So today main three things are high, low and virgin CPR. So let us start today's analysis. What happened today? Today is market opened here and it could not break the PDH. Market the first candle went down this level, but again it closed exactly at the PDH. So what this indicates? This indicates that there are there are buyers here, and the candle could not form as a red candle. And this candle, if you see, the body is red and there is a long wicks below, and the wicks is almost equal to or more than the body. This candle can be treated as neutral candle. So when the first candle is neutral candle, there is no trade, because you don't know where the market will go. Okay, so this candle is a neutral candle. Okay, now what happens on the second candle? Second candle took the support on PDH and then it reversed. Now many of you will think that yesterday and day before yesterday the same setup is happening. You see here also, day before yesterday it was a long candle, then the reversal happened. Okay, here also there was a long candle, then after 4th candle was reversal. So many of you will say today also we can do the same thing. Okay, now I will explain why it is not same as yesterday and day before yesterday. Because it is, you see, first of all the candle is not red, second the candle is not huge, mostly the candle should be big. So then it becomes an extreme candle reversal pattern. The name itself suggests that it is extreme candle and then reversal. Although if you would have taken the trade here and stop loss below this line, your target would have hit, but as a setup it doesn't go like that. And secondly, the very important thing, like suppose you treat this as a trending, it's going up, and then you wait for 20 EMA retracement here. Okay, what happens is, okay, this candle is not a 20 EMA retracement, it's a low probability because there is immediately pivot should be below the 20 EMA. So it is not below the 20 EMA here also, if somebody wants to go. And now I always say that risk reward, manage your risk. Okay, minimize your losses. Why it is important to have a stop loss? Even before taking trade, you must know where is your stop loss. First is entering trade, the next moment you should put your stop loss. Okay, so suppose by mistake, if you misread this pattern and you take a trade here, considering this is 20 EMA trade, you will enter here, you will put your stop loss here. Stop loss is must. If you don't put your stop loss, or if you delay, or you think that okay, I will see one more retracement and then I will put somewhere, where is the candle? See this huge candle, 1155 candle. This huge candle will not give you any time for going back and putting your stop loss. Even sometimes what happens is, even if your stop loss is there, if there is a huge candle like this and sudden fall, your stop loss will be slipped. Like some of the trading platforms, your stop loss will not be executed. So wherever the market is, that time you should exit. And if you miss to put the stop loss here, you have to take your stop loss here. See how many points, huge stop loss. So this is how you can blow your account. This is how you can make huge losses, and then there is a revenge trading. This is all psychology. So one should never take a trade without stop loss. The stop loss is here and you should be exit. Even if your trade doesn't work, your stop loss is only small. Otherwise it will be like, this trade will be how much, 6 times, 10 times stop loss you have to take, and then frustration. Then this is actually more than the technical analysis, this is kind of a psychology also. So I always say that with experience you will know, because just treat Nifty as a person. You are staying with Nifty, you are analyzing it, you are seeing it daily, so you will know its behavior after some point of time. So that's the experience. And then after this candle is formed, then there is no trade. I don't see any other trade, because the first, for W pattern also, if you want to take at the day's low and then the reversal, for W pattern also the criteria is first candle should be red candle, but the first candle is neutral candle. So there is no W pattern, there is no CPR reversal pattern also, because market went up and then fell down. If the market is falling down from top, then if there is a reversal from CPR, we can go for CPR reversal. Since there was CPR here, this market could hold this support and it reversed, then again it fell down and this remained sideways for this time. Now suppose you think that, oh, this is a big huge candle, let me go short on this candle. You are tempted, you want to go short and earn big, but like this, okay, like this, look at this day before yesterday's, day before yesterday, it's one day it fell, no, the market, just to fill the gap. Yeah, yes, this day, this is 28th November. Look here, this big candle has formed. Which is this candle? This candle is 10:30 candle here. This big candle has formed, and then back to back big candles, and it fell. Whole day it kept falling. Now why this has happened? Because this candle has broken the day's low and the CPR both. But here it is different. You see, here the candle could not break the CPR, and as long as the CPR is intact, CPR, it can bounce from CPR. If this candle would have broken, but even as I am telling you, even if this candle would have broken the CPR, where will you keep your stop loss? Because this becomes a huge candle. Above the candle stop loss, there is no question, no point in keeping such a big. Above the CPR, fine. But when where is your target? Immediately there is this support, and then there is a big support as virgin CPR. So, and this pivot also. So there's 3 supports, 3 hurdles on the way to your target. In such cases, it's a less probability. See, I'm trying to make it very simple and trying to make you all aware of the logic, how it happens, why it happens. Maybe some, this is a selling zone, suddenly a big order is, because there is no indication that this big candle will be formed. So how you know? As soon as the candle is formed, you will get panic. So instead, have a stop loss. So that's it. I don't see any other trade. There is no W trade, because first candle is no red candle. There is no CPR reversal trade, because the market went up and then came down. If it is falling from top, then it can be treated as CPR reversal trade. Okay guys, that's it. And I want to tell you guys one more thing. As I was telling that market may continue its upward journey because the gap border is filled now, and now it can continue. This was my prediction, okay, and it is intact. It can happen. The maybe tomorrow it will go up because tomorrow is expiry also, and it may go up. But in trading, anything can happen. So it's not necessarily that my view will be correct, and nobody should blindly follow anybody's view. You should have your own experience. This is just a probability, and the probability little above 50% probability is also okay for trading if you follow risk reward. Okay, thank you, bye bye, take care.